Good morning, everyone. You are watching a live daily market outlook for Tuesday, 10th of April 2012. The market seems to be gaining speed again after slowing down for the Easter holidays, as most of European markets were closed on Good Friday and yesterday, with some more action seen overnight. Initial weakness of the dollar is now fading in the action of this morning, as euro and sterling dipped lower after hitting some fresh highs of the near-term recovery. But so far the outlook for both remains rather positive in the near term, while the dollar yen is still in the defense and approaching its key near-term support, as it's the overnight release of the Japanese central bank that kept the rates as expected unchanged at 0 to 0.10%, but keeping their hands, keeping their fingers on the trigger in case of any action that would be likely seen. That's what they announced. So this was the immediate reaction, as the broader reversal of dollar yen of its recent yearly high at 84.17 is now approaching some important supports, and more of this we'll see on our technical part. The break of these levels like 81.20 and 81.00 would open way for a stronger recovery. Gold is benefiting current weakness of the dollar as it hit its fresh weekly high this morning at 1655 level, extending its recent recovery from 1612. However, the broader picture still shows the yellow metal under heavy pressure, as it's declining in past couple of months from its high at 1790. The crude oil remains under pressure. Some brief bounces higher were seen, but still the broader picture of the oil for the contract of May shows that the that the price is descending as it hits its recent highs at 110.50 and 109.90, with the most recent lows at $100.80, heading towards our next target at $100 per barrel. As mentioned from the today's calendar, the release of Japanese data was already seen 0.10%. Unemployment rate in Switzerland, we have no update at this point, so we're going to take a look from the other sources. It seems to be technical problem. Give me just a second. Meantime, also the German trade balance came in as expected at 13.6 billion euros surplus, while Swiss unemployment rate was also unchanged at 3.1%, as this was a forecast and the previous release. Still to come today is the Eurozone Centix Investors Confidence due at 8:30 GMT. A slight improvement of already negative outlook in investors' confidence in Eurozone is expected today. Forecast is -7.7 compared to -8.2 release of the previous month. From UK CB leading index monthly release for April, we have no forecast for this indicator, but 0.90% was the previous one. From US, starting at 1400 GMT, IDB economic optimism that is forecasted to improve, as the larger picture of the US economy is showing good and supportive signals of further recovery. So economic optimism is also coming along with this recently established positive tone. Forecast for today is 49.1 compared to 47.5 of the previous month release. US wholesale inventories at the same time, February release improvement compared to the previous release of 0.4%. 0.5% is the forecast for today. FOMC member Lockhart is due to have a speech at 16:45 GMT, while retail sales, BRC retail sales from UK are due late in the evening, 23:01 GMT. no change expected for today compared to previous, minus 0.3%. From Japan, also in the late towards the end of the day, 2350 GMT core machinery orders February release are expected to decrease by 0.7% compared to 3.4% of the previous month. And bank lending also we have no forecast. 0.6% was the previous in the previous release. Now we're going to take a look at the markets and see the latest movements in the majors and the commodities. As we can see, the euro dollar is again in defense in the near term price action, as the recent bounce of 130.32 low of yesterday and the last week of 5th of April, which is Thursday, managed to briefly break above our initial barrier that was mentioned in yesterday's presentation at 131.11, however, and also 131.15, which marks a 23.6% Fibonacci retracement of the latest down move from 130.80 zone that bottomed so far at 130.32. However, the gains were short-lived as the pair hit 131.43. This was the overnight's high ahead of the next significant support. That was our, resistance. That was our initial upside target at 131.60. 366, 131.63 is the high of last Thursday, 5th of April. 131.66 is 38.2% Fibonacci retracement, and this is what we were looking for. However, the price action stalled at this point, and now the risky point comes as the pair lost its initial support at 131.10, 131.00, losing also the both moving averages on the hourly chart, increasing risk of further descent towards initially 130.60, and then definitely will open way for a test of 130.20 and possible further extension of the down move from 133.84, where the gains were capped at the beginning of month of April. On the downside, 130.32 is initial level, initial support ahead of more significant. We'll see it better on the daily chart. The 130.00, 129.73. That marks the floor of the recent range of past 2 months or so, and the loss of this level would sideline the upside levels that were upside peaks at 133.84 and 134.85, which is more significant, marking the double top and the open way for a possible further weakness and the test of yearly low at 126.25. This is seen on the short term. The daily studies are losing traction as the pair broke below the main bull trend line drawn of 126.25, connecting this level with the 130.00. And the 90 days moving average currently is capping the upside action. On the upside, initial near-term barrier is overnight's high at 131.43 and 131.66. Our target, previous target, and only break above these levels would return the near-term positive structure in play for a possible further extension towards a true first 55 days exponential moving average that is currently at 131.75, and then retracement levels 132. First of all, 132.00 is round figure resistance, and 132.07 50% retracement ahead of 61.8 Fibonacci retracement at 132.47. For now, on the near-term studies, the outlook remains more turned towards the downside as the studies on hourly chart are losing their initial strength and approaching the midlines as this quick loss of momentum of 131.43 high might signal further weakness with the break below the center line to open way for test of the near-term base at 130.34. Cable is also in the near-term defense this morning after a steady recovery of its recent low at 158.64 posted on 5th of April, peaked just ahead of 50% retracement at 159.33, hitting a high at 159.29, which was the overnight's high of the day. Initial positive structure was boosted by break of initial barrier at 158.92, 159.00. This was mentioned yesterday as our initial barrier, where is also the previous high of 5th of April and the 38.2% Fibonacci retracement. However, the again so far stalled at on approach to the next upside barrier at 159.33 with the sharp reversal and loss of initial support at 59.00, 158.90. Now testing the trend line support that was already briefly dented at 158.63, a loss of which would be quite negative for the short term, for the near term action, as it will expose next array of supports at 158.50 and 158.34 and open way for a retest of 158.04, the low of 5th of April. The studies on the 1 hour chart are turning negative now and all pointing lower, while the 4 hour chart studies and after initial positive tone started turning lower, especially that the pair now tests the trend line support with break here to sideline the near-term bullish structure and keep more focused towards the downside. Loss of 158.04. First of all, the loss of next support at dynamic support of 200 days moving average currently at 158.43 would further weaken the structure and open 158.04, and then main trend line of the yearly low at 152.33 through 156 higher platform that currently stands at 158 zone. So loss of this very strong support would confirm the temporary top at 160.61 and open way for a further ranging of the pair. As you can see that the range established at the beginning of February 2012 is still in play. There was a brief break above the previous range ceiling at 159.91, but failure to sustain gains above 160 resulted in posting fresh high at 160.61 ahead of a current weakness that brought the pair back into the middle of the range. On the downside, the key supports on the longer term 157.70 and then range floor at 156.50 and 156.00. Which also marks around the 50% retracement of the first quarter of 2012 move from 152.33 that peaked at 160.61, and on the larger picture risk would be seen on loss of 156.50, 156.00 that will significantly weaken the structure and turn the focus lower. For now, holding above 158 might see some positive tone still in play, but studies are approaching their midlines and still pointing lower on the daily chart, and the loss of initial support of 200 days moving average at 158.44 would further weaken the structure of the cable. The dollar yen remains negative with this morning's action off the previous high posted overnight at 81.85, where recovery was capped. This is also the previous low of 5th of April that offered good resistance, and the fresh weakness that followed broke below the lower platform, pardon, at 81.20. That was initial support, where the broader descent of 84.17 found support. However, as the corrective action was limited by previous low and the 20 days exponential moving average, further extension of the short-term downtrend is now already below 81.19, looking for test of next significant support. 81.05 is 38.2% Fibonacci retracement of the entire move from 76.00 to 84.17. Then we have 80.55 higher platform of 6th and 7th of March. And on the break lower 80 zone comes where is also the low of 28th of February and the 50% retracement of the up leg from 76 to 84.17. Quick look at the near-term studies. As we can see, all studies are on hourly chart negative. Failure to break above their midlines or brief break now is losing traction as the studies are all pointing lower and already below their midlines, keeping the downside favored. On the 4-hour chart, initial recovery attempt as shown here is now lost, and the focus turned firmly to the downside. However, the studies were already negative. There was some recovery attempt that failed at 81 overnight at 81.85, and now studies are negative. On the daily studies remain negative as sharp loss of bullish momentum established on the bounce from 76.00 with the rate of change already at their extreme lows, and the MACD is now approaching the midline, setting scope for a further correction of the entire up leg, and with the levels already mentioned on the downside, 81.00, 80.55, and the 80.00 zone. The dollar Swiss is attempting to recover the recent losses after a recovery attempt from 90.00 base, peaked at 92.21 last week on Thursday, and then subsequent consolidation were initially held at the 91.60 zone on the downside, but upside remained capped as the latest attempt higher was capped at 92.15. A further extension lower dipped so far to 91.44. This was the overnight low where the temporary support was found, and the fresh strength that is now heading towards 92.00, which is our initial level to be regained in order to avert immediate downside risk, shows good potential of regaining this level and a possible attack at 92.21, our key near-term barrier, with hourly studies now improving, pointing higher. The momentum is already attacking the midline, while MACD is pointing higher and RSI is firmly up, holding above its 7 days moving average. On the 4-hour chart, initial weakness is now, studies are now started to turn towards the upside. As mentioned, the 92.00 is initial level that needs to be regained ahead of 92.21, would break here to confirm the higher low at 91.44 and resume the short-term recovery of 90.00 base low of 2nd of April 2012 for possible test of the next levels, which is the high of 92.52, high of 16th of March. Also before this, we have at 92.34 the 90 days moving average, and the main bear trend line connecting a yearly high at 95.93 and the lower high at 93.33 posted on the 15th of March. With the break of this level and 92.50 as well as 92.61 50% retracement to open way for a further extension higher, and the 93.33 would be the next focus, with the higher low to be confirmed at 90.00 on the break of the 90 days moving average, and the bear trend line of yearly high at 95.93. Back to the near-term studies, 91.44 offers now good support. Pardon. 91.44 overnight's low, also the previous low of 5th of April. It's acting as a good support along with the 55 days exponential moving average currently at 91 31, and only break of these levels would more significantly weaken the near-term structure. For now, this current action keeps the upside in focus. We need to see the break above 92 and 92.21 in order to resume the short-term recovery of 90.00 base. A quick look at gold as it is in the short-term recovery of 16.12 low of 4th of April, with fresh, as I mentioned earlier, a weekly high posted at around 16.55 in the early hours of today. This is just ahead of 61.8 retracement of the latest down leg from 16.82 down to 16.12. 61.8% retracement, currently at 16.56. Studies remain positive on the daily chart, with the 20 days exponential moving average at 16.46 so far, holding the downside, and ideally it should be held, as this is also the 16.48 previous high. Holding above this level would keep immediate bullish structure intact for a possible further extension higher. On the 4-hour, studies are improving, still holding in the negative territory. We need to see the firm break above Fibonacci level at 16.56, possibly a regain of levels at the previous high at 16.83 in order to improve, to confirm the near-term recovery. Meantime, we have the trend line of 1684, correcting 1684 and correcting 1697 and 1684. That's currently standing at 1669, and basically break of this and regain of minimum 1683 is to confirm the near-term, short-term positive structure for some further recovery. However, on the larger picture, the outlook remains still negative. Some regain of momentum is seen on the daily chart as the latest bounce of 1612 is now attacking the main bear trend line of the yearly high at 1790, which is the first barrier ahead of 1677, 1683 90 days moving average, and previously mentioned the high, while a strong barrier is at 1692 zone, where is the 200 days moving average, and the 1697 previous high, along with 1700 psychological barrier. Regain of these levels would be quite significant for the gold, as it would avert immediate downside risk and open way for a stronger recovery, and possibly focus higher levels with immediate barriers at 1716 and 1725. On the downside, loss of 1612 would open 1604 and 1600 as round figure support, ahead of possible extension down towards the key support zone and double bottom at 1532, 1522, below which to more significantly weaken the structure of the gold and its past 10 years strong uptrend that started from approximately $300 per ounce and peaked at $1,920 at the end of September of 2011. Oh. Also, quick look at crude oil. The daily chart shows that the oil price is in steady descent after losing initial support zone at 104.30 and breaking below the previous range top at 103.70. So far extended to 100.80, approaching our next very significant level at $100 per barrel, which is the psychological support and our short-term target. Studies on the daily chart remain negative and keep the downside in focus, especially that the pair currently is attempting to hold the losses below 90 days moving average. That will open way for a test of initial support at $100 and then open way for further extension lower with the significant levels 200 days moving average at 95.80 and below this 95.43 low of 2nd of February 2012. Negative outlook on the larger picture keeps, as I said, the downside in focus. On the hourly, some recovery action was seen of 100.80 yesterday's low, with gains attempting to cover the yesterday's gap lower. High of 102.78 was seen ahead of fresh descent, keeping the upside intact for now, as the previous high of 5th of April at 103.38 stays intact. Immediate targets on the downside, 101.36 and 101.07 ahead of 100.80. That will open way for a test of 100-hour target on the upside. As said, initial resistances saw yesterday's overnight low high at 102.78, while only break above 103.38 would avert immediate downside risk and open way for a stronger recovery. Studies on 4-hour chart are firmly negative, in the negative territory, and all pointing lower, with 20 days exponential moving average offering immediate resistance and capping the upside, while more significant barrier is 103.38 and 103.65, 55 days moving average. That was all for today. Thank you for attending our live sessions. We're back tomorrow at the same time, 7:00 GMT. Good luck.